kills me when someone who has a great service at the moment is going to be challenged because of some stupid policy in the background. Your future is in the hands of people who don't get it, bloody politicians included. If they implemented that and destroyed the entire industry, you would be waiting 6 months for a home loan from a bank. I have no doubt.
Welcome, Whitlam. Thank you so much for coming. I'm glad we are doing this together. Mm-hmm. I'm sure you have a lot of wisdom. Mm-hmm. So let's talk about mortgage broking today as opposed to 20 years ago.
Wow. Well, Whitlam Malkoun is my name. I am currently a senior Aussie mortgage broker. So I'm now completely paperless. There's no paper in my office whatsoever, and everything is done digitally. 20 years ago, we'd have to line up at the office, and head office would mail down to us in the snail mail a CD that we'd have to put into our laptops to get an upload of the current version of what we're using and current interest rates, whereas now everything is instant. It's almost like the stock exchange board. Things just change immediately. And I remember it was only, 12 years ago perhaps, that we had a gentleman from America stand up on stage who was telling us, if you don't have this, you're crazy. You've got to have a BlackBerry. Because that's technology in your hand. And so we've come a long way from BlackBerry too, I can tell you. So it's been good. The change continues to flow, Jazz. It continues to flow. Put it this way, if you don't like change, this is not an industry for you. But you've got to stay on top of it.
That's like any industry, but particularly when you're in finance, things change very quickly.
Yeah. They do. Things like compliance, which is crucial. Privacy of everyone. These are very fundamentals in any industry. So the compliance side of it has just gone tenfold, which is a good thing, I might add, especially off the back of the Royal Commission in 2017-18. So a lot of good came out of that, and the consumer is a winner, which is very important. And policy changes frequently too, and policy can affect a lot of outcomes for a lot of individuals, and also what people need to understand. And just one very basic example is when you're doing a loan for somebody, and we're talking about an interest rate today of perhaps 6.19, what a lot of consumers don't understand, or people in general, and nor should they, it's not their business to worry about it, but we actually assess you at a lot higher. So we have to have a buffer of 3% to 6.19. So while you're paying 6.19, we're assessing you at 9.19. And when you were in the cycle recently of interest rate rise every month, we had like 12, 13, 14 of them. So if I'm sitting here talking to Jazz, hey, Jazz, you're good to borrow this much money on your application. If you haven't sort of secured something in that 3-month pre-approval window, then basically what will happen is you can no longer afford that loan because it's gone up another 2 or 3 times. And so the continual conversation was very challenging for a lot of people. But you want to talk about change, that's as fast as it changed, almost weekly.
Back in 2006-07, interest rates used to be around similar, 6, 7, 8%. I remember sometimes 9% as well.
I remember it well. I was there.
Yeah, you were there. Of course you were there. How the dynamics have changed. Look at it now. Everybody's just, hyping about interest rates. It used to be the norm.
Yeah. And that's a really good point you raised, because for me, the hype is the media. Okay? And look, damn if you do, damn if you don't. The media is the media. They can make any story they like into any result they want. If you go back a couple of governments ago to the John Howard era, along with Peter Costello, that was a 9 or 10 year period where the country flourished. Your investors were good, your retirees were happy, they had money in savings account and term deposits. And by the way, I might just declare I'm not a financial planner of any sort, but everyone in every segment was doing well. Industries were good and people were employed, unemployment was down, and interest rates were 6%. Where we are today, exactly. 6.3, 6.2.
Yeah.
If you got a 5.893 year fixed, you jump on it because it was an incredible bargain. So enter, 10, 12, 15 years later, we're back at what I call normal lending. Normal lending in this country is 6%, has to be, for many fundamentals, which we won't worry about now. Why are people under duress or stress now? Has a lot to do with the media. Now, to be fair, I was telling people when only pre-COVID, so 4 years ago, interest rates plummeted, and I'm talking 3 and 4 year fixed at 1.89. That's insane. That's not sustainable by any stretch. So 1.89, 2.29 was incredible. And furthermore, the banks are going, here's $3,000, here's $4,000, trying to win your business. So that's not sustainable on anyone's map. Back then, I was telling my customers, make the most of your 1.89, understanding being fixed and policies around it, you're not allowed to make X amount of extra payments. I would say if you can manage to do your 10 grand allowed in that period of time, do it. Don't get used to 1.89. You'll never see it again in your lifetime. So if you're variable and you're 1.99, 2.09, pretend that your interest rate is 6%. So here's your repayment at 2%, and here it is at 6%. If you can do this, you're going to take about 13, 14 years off your loan just by interest payments. And when things start creeping up again, you're not going to feel it because you're there anyway. The pressure of people coming off a fixed loan now reverting to a standard variable rate with a discount, it shouldn't be shock and awe, but the media dress it up like it is. There's a lot of pressure out there. I'm not saying otherwise. The cost of living, groceries, good Lord, I don't get any change out of $500 on a Sunday. Every family that I am very blessed and lucky to have a small role in their finances with, I focus on what their position is. And my personal position is I have no longer teenagers in the house. I've got 3 adult children who have now found employment and doing their thing. And so I've been through that journey. I had 3 children with my wife under the age of 18 months. And so I know what the pressure's about going back, 20 years ago. I can understand when I walk into a family's home, I know at what point they're at and what they're going through. You just have to understand where your expectation is, because everybody should still be able to flourish and still be able to save some money even after expenses of the outgoing of a family, because everything should be in check. Even at 2.19%, you are still being assessed at 5.5, 6. So nothing should change.
It's definitely the hype and not what the actual situation is.
Correct.
Let's talk about people who so they're not able to probably buy the property, but they have these funds sitting, thinking they want to invest somewhere. What should they be doing right now, in your opinion?
Great question. There's so many variables to that question. Let's talk first home buyers. And to help first home buyers get into a property sooner rather than later, there's a couple of really, really solid government schemes. And one of them is known as the FHLDS, the First Home Loan Deposit Scheme. And what that means is that there are like about 10,000 spots nationally, and the government has partnered up with X amount of lenders who offer these spots. And you've got $20,000, $30,000 in savings, for example, and you want to buy your first property here in Melbourne or Victoria. That scheme allows you, Jazz, to borrow 95% of that purchase price with no lender's mortgage insurance fee on top of it. Because from what we call an LVR is a percentage, of what you're borrowing versus the value of the property. And the bank will often say that we will allow you to borrow up to 95% inclusive of insurance. Now, that insurance premium is about 4% as an average, right? So don't hold me to the exact number. Mm-hmm. So in other words, you've got to come up with 10%.
Yeah.
And that's bloody hard to do when you're paying rent or you're paying bills, and you'll get, it's hard on any day. Mm. So 10% plus potentially some other smaller costs, because as a first home buyer, this is a different segment altogether. They're saying that you can buy up to $600,000 with no stamp duty, and by the way, we'll let you borrow 95% with no insurance cost either. So you can come up with 5%. But 5% is $30,000 for a start. So you've got to have $30,000 of your own money, and you have a little bit more than that. You $2,000 or $3,000 because there are other incidentals that you have to account for. Mm. So to buy a $600,000 property as a first home buyer, you get zero stamp duty, thereabouts.
So you're saving about $50,000 straight
Pretty
up.
much, first up, and then there are some, rural incentives and what have you. So it's not impossible to get into a property, but you just have to sit back and seek the advice of a mortgage broker who has your best interest at heart. Yeah, and I'm sure that a lot of branch managers and home loan specialists can work you through your scenario. Ultimately, it comes down to how bad you want to achieve what you want to achieve. Mm-hmm. So, and there are other segments where you can borrow 100% of the property plus costs by using what we call a family guarantee. So, for example, you buy something again, look at $600,000 as the example, and you want a loan of 105%. Or 100% because you cover it anyway. The bank takes a mortgage on that property at 80%, so 480,000. And then if you have no contribution at all, the bank will then take the balance of what's remaining or what's required and secure that against mum and dad's home as an example, as a second mortgage, provided that there's enough room to move what they own, etc. Anything that the bank can take a mortgage against and it fits within their policy and their parameter, you are then able as a first home buyer to actually purchase without putting in a single cent of your own money. But remember, you now owe effectively 105%. 80% against your home and effectively 20 to 25% against mum and dad's property. And so what I encourage my customers to do is really focus on that 25%. So make your minimum payments here, absolutely, you have to. But here, because mum and dad have put their livelihood on the line for you, you've got to pay that back as fast as you can without being silly. Now, if that means an extra $200 a month in repayments because that's what you can afford, great, do it. If that means you can afford $500, do it. We offset it. We do a whole host of things to bring that down as fast as we can. Sometimes, not in the current market, but beforehand, 2 years later, you could value your property and you would find the forced hand of equity. So because you paint it down so aggressively and natural market conditions, that property will increase. So even at a conservative 3 to 5%, that gap gets larger and larger, and it's a lot larger in previous times. At the moment, it's a bit dormant. We know that. So within a 3-year period, you should be in a position pretty much between your repayments, extra repayments, and the value of the property to be able to value your home and hopefully have that stand on its own because you're at 80% or below with no other cost. And we can free mum and dad's property up and say, here, mum and dad, thank you for your help, greatly appreciated. We're now good to go on our own. And that way you're in the property market and you're able to service both loans. Not mum and dad aren't paying for nothing. You're paying both loans. Then you're good to go.
Just give a little idea about the numbers, like on 600,000, how much repayment would that be, including both the...
Can I take a guess because I've got nothing in front of me? I'd say about 3.3, roughly, about 3.2, 3.3 a month. The interest rate would be, 6.29, let's say.
Yeah. And
there's a couple cheaper. What I never do, I won't quote you the cheapest rate to try and win you over. I say, look, man, we've got rates at 5.99 or 6.09, but here's one at 6.29. Because at 6.29, you got 10 or 12 lenders to choose from, whereas at 5.99, 6.09, there's probably 2. So for me, it's about choice, and the choice of the 5.99 and 6.09, they might not suit what you're looking for. So it's not unaffordable, and I still reckon even you get away with about 2,800 to 3.2. They're in that pocket there is where you'd be.
In repayments. So you were talking about policies just before. So someone who is very naive, very like a fresh start, they have no idea about policies and they're attracted towards this, 5.99. What do you think is the difference?
I'll say this right off the bat. I think that interest rates are important, but it's not everything. And what I mean by that, I'll give you a couple of examples. So if you're in a position to fulfill the lender requirements to obtain a 5.99 rate, you can't borrow any more than 70%. But you might have to borrow 85%. You're not going to get it, are you? I always look at the individual. I will always understand what you're trying to achieve, and I'll find the most cost-efficient way with choice to help you get there as fast as we can. Now, that might mean an interest rate of 6.39 because you're borrowing 91%. So the higher that you borrow, the higher the LVR, the loan value ratio, you're not going to be getting the 5.99 anywhere, period. But you're not being disadvantaged. It's just a higher risk, and that's fair enough. We also have lenders who'll take that on board. Now, he won't be getting 6s, he won't be getting 7s, but he'll get a 9, 9.5. If you've got an interest rate that's 3% higher than what everybody else is paying, then that lender, who's what we call a non-conforming lender, because they charge a little bit more, do it differently, will be willing to discount that rate for you. And then a couple of years later, we can get you out of that lender because they're short-term and go back to normal lending. So whichever way you look at it, first home buyer, bankruptcy, multiple investor, whatever your personal circumstance is, a good mortgage broker will always have a solution that will tie in with your need and your objective, which is really important.
How to spot that if that person is working towards your interest and not his own?
I'll tell you how you're going to spot the difference. It's actually really simple. You're not going to get a different rate to what I'm giving you. It's actually really easy. So if you're bankrupted, I don't care who you speak to, mate, it's going to be the same policy no matter what.
Right.
So the question is fantastic, right? So for 16 years, I've done nothing but self-generate my own leads. And how did I do that? By taking care of my customers. Not by advertising, not by social media, not by whatever we do. These days, that's important, by the way. But initially, all I think of was, if you were my daughter, if you were my sister, if you were someone who's close to my family, what would I do for you? And that's a simple fundamental. So for me, it's not hard. What really excited me in recent times, you're going to laugh, right? I had 5 face-to-face appointments. 5 were the sons and daughters of the parents who I did loans for 20 years ago.
Wow.
If you can be referred to a broker by a family member, a friend you trust, someone who's used them, that often is a better way than doing an Instagram search or a Google review search, and that's wonderful. But if I say, hey, here's Whitlam's number, I've dealt with him, give him a call, to me, that's not just my reputation, that's your reputation.
So tell me, if somebody has a loan that you've, done their loan and, they're paying their debts off or their repayments, everything is going good. And what should they be doing? Like if it was your kids, you said your kids are 20s, in their 20s, and if they are going to, have a little startup, say, and they want to extract the money out of their home loan, top it off to the max.
Lenders have policies in place to allow for a worst case scenario. So never will you ever get a loan on face value. 2, whatever living expenses you've got, and demonstrate to me via saving statements or via your budgeting tool, whatever you got. That's great, but the bank has their own version. And in policy eyes, the more you earn, the more you spend. Now, whether that's true or not is irrelevant. The bank will stick to their policy, and their policies are pretty proven, pretty sound. Something so, well, now thankfully simple to a degree, pretty much a global pandemic. You would have never picked that. So if I'm doing a loan for you in November 2019, I'm not about to say, oh, by the way, Jazz, hey, just in March coming up, here's what's going to happen. No. So there are always risks involved with borrowing funds, always. However, there is policy in the background to make sure that you don't fall under financial stress. Now, touch wood 100 times over, right? But if something were to go wrong medically, circumstances change. So my advice to people is communication is king. And you start with a phone call to your lender. Don't put your head in the sand like an ostrich. Get on the front foot and say, hey, my circumstances have changed. Can I go to interest-only repayments for 6 months, for example? Because a lender is almost obliged, and they will. They're very, very good at what they do. So they're obliged to accommodate a change in a situation that's unforeseen. Insurance, not super, insurance is exactly that. Is, okay, I'm about to become an adult and buy my first property. You've got to accommodate insurance. You've got to accommodate your will. And you've got to accommodate your life in general. Imagine you take on a debt of $750,000 and somebody falls ill. And as much as you don't want to talk about it, it's reality. We've seen cancer situations at 28, 32. Absolutely. It doesn't discriminate, right? Oh. You're either going to be in a position where the appropriate insurance, and you speak to the appropriate person about that, will cover your situation, or you're going to lose your loved one and you're going to lose your house. So does $3,000 a year all of a sudden sound expensive? I wouldn't have thought so. If you had a policy which paid you out, say $100,000, right? And something happened to your partner and you lost your partner and you need to grieve. You can't work, you're mentally stressed, but you had a payout within a month of $100,000 and your mortgage prepayments for the year are $40,000. At least for, I'd say, 2 years, your mortgage is covered. Mm-hmm. This money's not for you to go and blow and do what you want. It's designed to help you overcome adversity. Help you get your confidence back, help you grieve, help you get on with things to go back to a normal lifestyle without changing what you have. That's what insurance is. If I don't feel that what you're doing is going to be sustainable, I'll say right from the word go, hey, you're 24, 26, buying your first property. Do you reckon you really need to buy something for $800,000? You know what? Let's just get into a property. Let's get our foot in the door. Let's understand how a mortgage works. Let's understand the costs associated with it. Let's understand that when you go to the mailbox and you get the gas, water, rates, electricity, phone, and whatever else bill, you don't hand it to mum and dad, you're paying it. So don't worry about that house in a suburb we all want to live in for $1 million. Let's go a little bit further out. And then what you'll find is that you might have enough equity, I say might because of circumstance, to be able to buy the property you want and sell that one and cash in. Or you might be in a position to be able to rent that one out as an investment and buy another one. Who knows what 3 or 5 years does for us? I'm not licensed to provide financial advice on any matter. I can guide you, I can state facts, I can show you numbers and actuals. What I do is I share my personal experience because I did exactly that. We were blessed with twins. They were born when the eldest was 18 months old. And so I said to my wife at the time, Danielle, I said, hey, from the school perspective, what's important to us? And like most, primary school is pretty reasonable, it's affordable, but depending on where you decide to send your kids, that could cost quite substantially different if not public, etc., right? So we worked out what was good for us. So I would say to my client, okay, well, what's good for you? If you think you're going to be spending 20, 30 grand a year in private school from year 7 to year 12, you're going to need a bit of money. So if we start planning from now, here's what I did. And what I would encourage you to do is speak to your accountant about your plans, and he or she will then be able to give you a guide as to the tax benefits, the implications, what's working, what's not. And once you got that advice, and once you know what you want to do, I will gladly come over the top of that once I see the documentation and help you get that money out to make that happen. You need to be surrounded by good advice, good legal advice, meaning that they're accredited accordingly with the right institution. So again, what I tell my customers all the time, I always leave them with, if you can think of anything finance, just think of me. Give me a call. Tell me what you want to do. And if I can't help you on the spot, I will find someone within my network who I've met and trust who can help you with what you want to do. So we don't just do home loans. We do everything. Anything asset. We do helicopters, bloody boats, you name it, wow. We do it. We've done, $400,000 trucks, all sorts of stuff.
You mentioned shares in between, like, they want to withdraw some money from the equity and invest in shares or buy another property. What's your take on that?
If you're in a position to do so, I would say do it. Get the advice first, of course. Understand the commitment. And when I sit with people and I say, hey, look, we think we'd like to look at buying our second property as an investment, I say, okay, well, what does it look like? Let's have a look. Imagine you've got an existing family home and you borrowed 500 grand. And you've been really good for 3 years, 4 years, you got 200 grand off it, you got 200 grand ready to go. But that 200 grand is sitting in redraw, extra payments. And you say, look, Whitlam, I want to buy this home down the road here, a larger family home, family planning, we're going to rent this one out. What you can't do is take $200,000 out of your home loan to buy that property and then declare 500 grand here as a tax deduction. You can't do that.
Okay.
What you can do is declare $300,000 because the purpose of that $200,000 was for owner-occupied purposes, not investment purposes. So I would say to my customer, okay, any extra repayment you think you can do, let's create an offset account. Your limit is always 500 grand, but offset is working for you beautifully. Because that's your money, you can take it and do whatever you want with it. And whatever is owing there is what's tax deductible. But now you can put 200 grand into a property and a loan that's not deductible. So to answer your question, whether it's shares, investment, property, whatever it is, we have these conversations daily and continually. Because whatever interest you earn at 4 or even 5% online, depending on which one you go with, you still got to pay tax on that anyway. So you've earned money, PAYG, right, your income. You've paid tax on that already, we know that, right, because in your bank account and everyone's happy. And then I'm going to be a good boy and I'm going to save 20 grand in a savings account. And these are conversations we have all the time. Not advice, they're conversations that lead to advice and then action.
It's very important. Don't just look at your friends, what they're doing, and look at other people from outside and just jump in. On the other side, waiting as well can be challenging sometimes or can change things. How long should you wait to get a property?
I had a customer who I did, you ready for it? I did 9 pre-approvals. Actively looking, they just couldn't find the right property. Finally, it would have been 2 years and about 3 months later, and they bought for whatever they bought, $1 million, whatever it was. And when he rang me, I actually thought he was ringing me for another pre-approval. I was about to crack it with him. I said, mate, trust me, you don't need 10 of them. 9's enough, right? He goes, no, we've bought. I said, thank Christ. So when's the right time? The right time is when you have followed your due process and you are pre-approved. There's no age barrier. I mean, you might be coming out of high school and been working for 4 years and saved up a lot of money working at Macca's and everywhere else and find yourself in an employment position where you're earning some pretty good money that will allow you to borrow $400,000. You might be, I've done a first home borrow for a 52-year-old.
Wow.
So when's the right time? It's up to you. When you can afford it, when you feel for that change, and we can demonstrate you can do the loan. So there's no right and wrong time. you're going to love this one. I had an 82-year-old, wonderful, beautiful, beautiful lady. I won't say who or what. And she rang me because, you ready for it? She wanted to do a $700,000, $700K renovation on her magnificent home. That was her deceased husband's wish. So they worked on these plans and everything else to make this joint, it was unbelievable as it was. And she was able to service it because of the structure that they had done through the share market and monies and what have you. So she could afford it, no problem. But she was hell-bent on finishing that project for her deceased husband's best wish. And she did it.
Wow.
So when you think you're too young or too old, no such thing. So long as the basic fundamentals work and it's serviceable, you can do it.
Go for it.
And there's no pressure. There's no commitment. There's no cost. There's no fee. No, nothing. We're simply going to take an application and you're going to provide with evidence, payslips, ID, etc., that we're going to put forward to a lender that we choose together to your benefit, who are going to say, you know what, Jazz, we reckon you're good for the money. Here's your pre-approval. Now, whether you use that pre-approval or not, let it fall over. Shred it. I don't care.
Yeah.
But you're ready. And that's my point.
Let's shift the conversation to someone who wants to become a mortgage broker. It's a trend these days. Every other person wants to go into finance.
It's incredible, isn't it?
It's a trend, right? Do
Yeah,
you see it as well, or it's just me?
Oh, it's doing my head in.
Yeah. It was not very popular some time ago, but in this day and age, I see every other person wants to go into finance. What is one advice for a startup?
You got to set a realistic expectation because this is not about you. This is about the customer you sit in front of. And I guess it depends on who their circle of people are. What they see is a nice flash car in the driveway. I've got a couple of properties, the lifestyle, we're travelling. Yeah, great. All of that comes, but not that bloody hard work, mate, let me tell you, right? Don't think you can walk into an industry and start pulling 300 G's out of it. That will come over a 5-year period and 5 very, very long, challenging years. When I was becoming a mortgage broker, I didn't know. It happened by default. So I was working PAYG at Kodak back in the day. Oh, bloody hell, a long time ago.
Wow.
I screwed that up completely. But anyway, we're all made redundant. Okay. And the opportunity came to attend an information night at Aussie. And I did. It was funny because the presentation showed what you could earn over 6 charts. And everyone's eyes would go to line number 6, where it's got, some massive, massive money I never thought I'd see in my lifetime. Whereas the first column was what everybody could earn working at McDonald's in the first year, 28 grand, 35 grand. But your eyes go here. They shouldn't go there. They go here. Because without doing the basic fundamentals, that ain't coming. I don't care who you are. So for the first 4 years, I call it my AAA theory. You're going to love this one. So my AAA theory is anyone, anywhere, anytime. So if I had a phone call 11 o'clock Monday morning, I'll be at your house. 6 p.m. Tuesday night, I'm at your place, followed by an 8 p.m. You want to see me Sunday at 2 p.m., I'm at your place. You want to see me? I'm there. And that's how I built my base foundation over 4 years. I worked 7 days a week, to the point where I was convinced that with no new leads and referrals only, I could stand alone. So I started dropping Sundays. It was family, basketball, footy, whatever was happening. It's family, gardens. 12 years of doing it hardcore. I thought I'd drop a Friday and by choice only. Who wants to talk finance Friday night? You come home from a long week at work. All you want to do is put the footy on this time of year, crack open a bottle of wine, have some dinner. You don't want to be talking numbers, right? So if you're a budding young person who wants a career, I'll tell you this is the upside to it, okay? Show me a better industry that's more robust and secure than finance. And what I mean by this is, let's go back a journey. So 2010, we had what's known as the GFC, the global financial crisis, which crippled a lot of countries for many, many reasons, right? So we withstood a GFC. Now, we're in finance, remember, right? Okay, fast forward a little bit longer, 2017-18, we had what was now known as the Royal Banking Commission. It was almost a Royal Broking Commission, but we won't go there for this purpose. The industry was put under the spotlight, banking, so a lot of transparency and a lot of stuff, really cool stuff, came off the back of that, only to be hit then with COVID in 2020.
Yeah.
Right? And I was so busy during COVID that I didn't remember what COVID was. It was just a blur. We've withstood a GFC, a Royal Banking Commission, and now a global pandemic, and we're still robust and we're still growing. In fact, the last stat I saw, it was 68% of all mortgages in the country of Australia being written by the third-party banking, which is us. It's almost foolproof after what I just said to you, but the best part for me is genuinely you've got to take an interest in what you're doing. So for me, I don't work a day in my life. So I come to your place and I talk about something I'm pretty passionate about, the money side of it, and I actually get a chance to impact your life in a positive manner. So for me, I'm already winning. And then if we do the job and get it all right, and then I'll get paid eventually through the lender, through the bank, etc., that's just cream on the cake for me because we all need to make an income. And if you're young and want to enter the industry and you've got a passion to help people, or you've got a passion to make a difference in their lives, there is nothing more satisfying than what we do in a pretty robust industry that I believe is going from strength to strength. And the phone always, always rings when you do the right thing, whether interest rates are going up or whether they're going down.
Good industry, actually one of the best industries to be in.
Yeah.
As long as you're hungry. That's what
Correct.
I got from you. Like, you really have to put your head down and work.
Yeah. There are roles in our industry. So for example, you might come across a broker or a brokerage. Like I was with some franchisees last night, for example, and they've got 6, 7 mortgage brokers in their office. And that office might offer you to be a commission-only broker, and they provide you leads, or they might have you on a base salary. I don't know. So base salary, and if you do 2 million a month or 4 million a month, they give you targets, KPIs. It's a job, but you won't be earning that 6 column I was telling you about before.
You know, we have downsides, we have challenges in every industry.
Yeah, we do. Absolutely
Yeah.
we do.
So what were yours?
It's not customer related because, see, it's like a production line at Holden that I was talking about before, right? It's the same thing over and over, but it's not. Because I don't know whether you want to refinance, whether you want to buy, whether you want to invest, I don't know. The dark side for me was when the Haynes Royal Commission in 2017 came out with these recommendations, which were absurd. And I don't even know where they came from, because as you watch the circus that it was, and they come around and they say, you know what, Jess, I'm coming to you right now, and I'm going to do all this work for you, not a single cost to you. How we get paid, we disclose it. We show you in the contractual paperwork. And the lender who wins your business pays Aussie a fee. Aussie pay us a fee, right? That's how it remains for free to the consumer. The Haynes Royal Commission was to eliminate the commissions, but pay up front a fee of $4,500 charged to the customer. It kills me when someone who has a great service at the moment is going to be challenged because of some stupid policy in the background. Your future is in the hands of people who don't get it, bloody politicians included. Sitting there nodding their head like they know what's going on. They got no idea what's going on. And we started a massive campaign around the country to go to our federal members to demonstrate what we do to our clients. If they implemented that and destroyed the entire industry, you would be waiting 6 months for a home loan from a bank. I have no doubt. It would have completely buckled the country. That's how stupid it was. Yeah.
Okay, so one thing that I always ask my guests all the time, how do you manage family and work of this sort?
My wife, if she wasn't as supportive and understanding of what we were trying to achieve as a family, and remember, there was no golden nugget, there was no gold pot in the rainbow. This was all foreign to me, mate. I just jumped in commission only. I've gone, let's have a crack. There's no way this would work. And people, I laugh because people go, mate, you work hard. And I thank you for recognising that. But let me tell you who works harder, mate. That's my wife. I get to come home and sleep for 6 hours. She doesn't. Without an understanding partner, it's extremely challenging. So to answer your question, you need to be reasonably available to your customers. But you must be in charge of when they can reach you and when they can't. When I'm at home, if I say, right, I'm switching off, it's 8 p.m, I've had enough for the day, because that's a regular time slot for me, I will close that door, I will close the garage, and the minute I come inside, I'm at home. My focus is the family, my focus is everybody there. So after many years of understanding, many years of support, I'm very blessed with, my work week now, right here, looks like this. So Monday to Thursday, I'm very aggressive in my timing. So I usually start 7:30 in the morning in my office, and I'm done by 9 p.m. So it's a pretty big block. Come Friday, lately I've been doing a little bit of work, but primarily I do nothing. But I like to catch up with people, or for a coffee, or a game of golf if I can. Rare, but I can. I do it. Weekends, forget it. Don't talk finance to me. I don't want to know about it. If I'm at a party or a barbecue and someone comes up and says, hey, Whitlam, I've got an interest rate off, I said, you know what, just stop. Yeah? You got my number? Ring me Monday. Monday morning, I go into that office like a raging bull. I can't wait to get in there. I'm so pumped, and I want to make another impact on somebody, right? So that's what refreshes me. I never ever missed not one parent-teacher interview. Not one. That hasn't changed today. We still watch my son play footy in the weekends or basketball or whatever they're in. We're there. Fundamentally speaking, you've got to find a happy balance. That might be date night with your partner on a Thursday night. Go to a restaurant, man. Go and enjoy company together.
I really like the fact that you're appreciating your wife and the work she's done in the background. This attitude of yours, I think, is coming because you have the understanding of what are your limits. You have to acknowledge that as well.
100%.
To keep getting it.
What we have today, we have as a sacrifice that we all made. Whole family. And whilst we're in an opportunity to make sure that everyone's okay and secure, I put that down to work ethic and I put that down to sacrifice. The two go hand in hand. And when you get an opportunity to sort of adjust your work ethic, in other words, okay, well, do I need to do it 7 days a week? Well, no, I'll do it 6. But this notion of young people becoming broke is because I can work 3 days a week and don't bother starting, mate, get away. We don't want you. The youngest of my kids literally this morning, received his accreditations with Aussie to start his own journey, right? So he's got his own company, his own structure. He'll start networking, and he is me 20 years ago. So I'll get a chance to mentor him, and I'm looking forward to seeing what he can do. And he understands the ethic behind it. He sees the old man, what he does and how many hours he does. And so he's ready for the challenge, he believes. So good luck. He does things a lot better than I do, I have no doubt. In fact, in my office a couple of weeks ago, he showed me a couple of things that I'd never even realised on the software we use. He goes, here's what I do, because he was working in the background on some items. I said, mate, that's awesome. You've been in the office for one day, you already showed me some stuff. Fantastic. And he's all over the social media stuff, the TikToks of the world. I don't have a TikTok account, by the way. I'm not interested. This younger generation are awesome because they are so proficient at what they do. They adapt quickly. They're very smart technologically. And when they find something that they really enjoy doing, they go hard. And work ethic is not taught. Remember that. It's either in you or it's not. I'm pretty sure it's in my son.
Work ethic is not taught. Yeah, that's a good one. Work ethic is not taught.
No, it's not. Nobody will see the hard work. All they see is a luxury car. Don't worry about living the Instagram life. Live your own life. Work your ass off. Get the result you want. And remember this. Get what you need, and then you can have what you want. Look at your studio here. You've invested some beautiful equipment. Maybe you started with a little handy cam. I don't know. But you grow.
I did.
Oh, well, there you go, right? So that's you see what I mean? So get what you need, then you can have what you want later. But without that mindset, I think you'll fail and fail early.
Amazing. Thank you so much. It was
pleasure.
It was wonderful talking to you, and I have few nuggets to think upon.
Good. Thank you for the opportunity, and always good to see you. And you've got a lovely smile and a beautiful family, and I'd always love to catch up with you at the very least, mate. So thank you for today. Greatly appreciated.
Thank you.
Ta.